Hey guys, Steven here. Is day trading a good side hustle? Let's find out. Hey guys, Steven here. Is day trading a good side hustle? Well, the short answer is absolutely not. I'm going to repeat that again. Is day trading a good side hustle? The short answer is absolutely not. But there are going to be plenty of other types of trading that are perfect for those looking to supplement their income as a side hustle. Now, first, if you don't know me, my name is Steven Brooks. I've made over 7 figures trading for myself. You can see over the past month, I've made about $157,000 trading. I've been able to make a lot of income myself trading. Now, when I say income for myself trading, like if you buy a stock at $10 and it goes up to $15, but you don't sell the position, that is an unrealized gain, right? That is basically a paper gain. When I talk about realized gains means you place a trade, you make $100 on the trade, you exit the trade. That additional $100, your account balance grows by $100. You can do whatever you want with that $100. You can reinvest it. You can withdraw it from your account, put it into your bank account, go out to dinner with it, all that stuff. So I specialize in realized gains, like income type of stuff. Not, okay, I bought the stock at $1, now it's at $10, and I have a paper gain of, 900% or 1,000%. Realized gains means actual real income. And I've also taught thousands of other traders how to do the exact same thing, just like I taught Jeff, and I'm actually going to play a little bit of video right now from Jeff.
Hi, I'm Jeff. I've been working with Steven for a few years, and last fall I started the trade. And it has been one of the easiest trades I've ever done, and it's been very, very successful. I get about a 1% return on my investment, and in the last few months with a $100,000 account, I'm making about 1% a week or $1,000 a week. Think about that. In this crazy market, 1% a week on your return on capital is just off the charts. It's so easy. It just takes a couple of minutes a week to do. And by far, it's one of the best trades I've ever done. Have a great day. Bye-bye.
Now, I want to point something out that Jeff just said. Look, all this stuff is great. Making 1% a week is great, even in a crazy market. And candidly, it's basically always a crazy market. But on his account, $1,000 a week, it's fantastic. I would definitely call it a great side hustle, right? He says it takes him 5 minutes a week and quote unquote, it's super easy. So for me, making $1,000 a week, 5 minutes worth of effort, it's definitely a great side hustle. But what Jeff is not describing is day trading. Right? I want to make that clear. For Jeff to make $1,000 a week in 5 minutes worth of work, that's not day trading. That is not day trading, right? Basically, day trading is sitting there for hours on end, riding the market up, riding the market down. Day trading itself is not a side hustle, right? Day trading itself is not a side hustle. For me, day trading is really like a full-time job or even a part-time job where you go there for like 4 hours straight. So really kind of the main difference is day trading is not a good side hustle because day trading is not a side hustle, right? Day trading, and by the way, there are plenty of ways day trading can work, but day trading is much more of a full-time job or a second job or a part-time job where, okay, I'm going to sit there at 9:30 in the morning and I'm going to be there for 3 hours straight. That's what day trading is, right? And I believe that there are better uses of our time than day trading in that kind of way. And I believe there are better ways to make consistent, pretty repeatable supplemental income on the side that require way less time than day trading does. And again, Jeff just gave you an example of his experience doing that, where it's just one trade at the same time every single week. It takes him 5 minutes and he's making about $1,000 a week. Now, the traders that I have coached to 3, 4, or even 5 figures a week as a side hustle, meaning, they have a main source of income, whether it's a job or a pension or Social Security, yet they're looking to supplement that main source of income with trading. Here's something that's really important for you to note. None of those traders who wanted this as a pure side hustle were doing anything more when it comes to trading at the very high end of the range, like an hour a day, and at the very low end of the range, like 5 minutes a week, just like Jeff mentioned. So again, day trading is not a side hustle. Day trading is a full-time job. All the folks who I've worked with over the years, and there's been over 6,000 of them, who are looking to supplement their income on the side, none of them spent more than an hour a day at the very, very most. And those are people who have a lot of time, but some of them did as little as about 5 minutes a week. And again, you can get your goals, typically your supplementary income goals, with some sort of version of that. Now, with this being said, if you came to this video interested in learning how to day trade as a side hustle, I won't be covering that because there's no such thing. Again, day trading is not a side hustle. Day trading is a full-time job. So if you came here looking to learn how to day trade as a side hustle, you can go ahead and log off right now because we're not going to be covering that because that really just does not exist. But if you want to learn how to do some trading as a side hustle, then you can certainly keep on watching. And it actually is quite easy in my opinion. It's quite easy in my opinion. Again, a lot of people, when they come to the market, even if they don't have a lot of experience with the market, they kind of have been pre-programmed on how it should work, right? They're pre-programmed on how it should work. I should learn how to do charting. I should learn candlesticks patterns. I should watch CNBC. I should keep up with the newspapers and what the news is saying. I should be aware of, who has earnings, when they have earnings. I should buy the most popular stocks, all of that stuff. Even though people come into trading without a lot of experience, they feel like they have a lot of experience because they are aware of financial markets and have been aware of financial markets for however many years. But it's actually really simple in my book. And it's one of the reasons I was able to be so successful is because I didn't really come into trading with an opinion. So you need a strategy that has a very specific set of rules to follow every day, week, or month. And then what you have to do, right? Take the example of Jeff every Friday at 1 o'clock. So what you have to do is schedule that time on your calendar so you don't overbook it, right? Where some people get tripped up is they say, okay, I'm going to start doing this every single Friday, but then all of a sudden commitments start to pop up and it gets in their way. Put it on your calendar so nobody can double book you. Nobody can overbook you. Like that's a time from like 12:55 to 1:10 or 1:05. Like I am busy. You cannot double book me. So all we have to do is have a strategy that has rules. Now, why do we need a strategy that has rules? Because it's easy for us to do. Like if we have rules, we know on this date, at this time, place this trade, that's easy for us to do. We don't really have to worry about all the other things that we may potentially worry about if we're unexperienced when it comes to the market. We don't have to worry about what Tesla's doing. We don't have to worry about what the president is doing, what the Treasury Secretary is doing. We just need to know, is it that day of the week? And is it that time of the day? And if it is, I'm going to click these two buttons in this sequential order, and that's it. Now, what Jeff was mentioning again is a trade that was done each Friday at 1 p.m. Eastern in the afternoon. Same trade in the same stock every single Friday, rain or shine. And again, the really nice part about that is that removes a lot of the discretionary component that a lot of people really get wrong, right? We don't have to monitor the market like one would in day trading to see if something looks good. Right? We don't have to consider so many things that candidly are not critical for us to be successful when it comes to trading as a side hustle and supplementing our income. It's just on this day, at this time, do X. That's it. You do not need anything more than that, not even a little bit. Now, if you're going to do this as a side hustle, you want to be winning or have the feeling that you are winning way more than you are losing, which means the less time you're able to devote to this as a side hustle, the higher the win rate is going to need to be. And the more time you're able to devote to this side hustle, the lower the win rate needs to be. And we'll talk about this in a second, but I'll get into it right now. And if I repeat it later, I'll skip it. When you are doing something, let's say like Jeff was doing once a week, in order for you to feel confident in what you're doing, you need to have a very high success rate. That's not hard to do, but you need to have a high success rate so that you are used to winning and that you maintain it. If you are doing something like we're going to talk about here in a second, that's once a day, the win rate can be a little bit lower because in exchange for doing it more frequently, you are increasing the number of occurrences. Right? So the less time you have to devote to it, the strategy that you employ needs to have a really high win rate. The lower time that you have to devote to this, the strategy can have a lower win rate because you are increasing the number of occurrences. Right? So let's kind of get into the strategy a little bit here. So to start, let's say you are able to do something at the market open, which is 9:30 a.m. Eastern, Monday through Friday, unless there's a holiday. Right? Like I said before, or like I alluded to before, this kind of availability is nice because with 5 days a week of one trade a day, you're able to increase your number of occurrences pretty nicely to the point where if you average 3 winning days and 2 losing days with everything else equal, you're making money pretty reliably. You're making money most weeks, and you're feeling confident to the point where you can keep on doing this, right? Individual trader confidence is very, very important, and we want to make sure that we are aligning you and the amount of time you have with something that's going to fit that, allowing you to stay with it and really get that long-term success that you're looking for. Now, the most important thing, really in everything that you do when it comes to trading, but when it comes to trading as a side hustle, the most important thing is that the strategy has to be one where there is a mathematical edge in your favor. The reason why it has to be the case is because if you don't know for a fact that the strategy you are using has a mathematical edge in your favor, what that means is the market has a mathematical edge over you, and over time, you will lose. So we want to flip that. We want to reverse that. We want to make sure that we know what we're doing has a mathematical edge so that over time, we will win. In fact, if I'm going to be quite honest with everyone, if you don't have a known, like you don't know for a fact that whatever trade you're about to place has some sort of a mathematical edge, like I cannot tell you what to do because I'm not your personal registered financial advisor, but I wouldn't do it. Because again, if you don't know for sure that what you're doing has a mathematical edge, the mathematical edge is against you. And over time, it will be impossible for you to make money. So you want to make sure as a non-starter, if you're going to click that button, if you're going to place a trade, if you're going to risk your hard-earned money, that strategy better have a mathematical edge in your favor. And if it doesn't, you need to seriously consider not doing it because you're doing something where over time, you straight up will lose. Now, let's kind of get into a little bit of what a mathematical edge strategy is. There are strategies out there, and there's a lot of them, and we have a lot of them on this channel, where at the end of the day, the buyers are not supposed to make any money, and the sellers are not supposed to make any money. Basically, both sides of the equation, because whenever you buy, there is a seller on the other side, and whenever you sell, there is a buyer on the other side, right? To know it has a mathematical edge, the buyers and the sellers are supposed to make nothing. They're supposed to make absolutely nothing. It's supposed to net out to be zero at the end of it. But with a large enough sample size of trades and factoring in the real world cost of doing business, such as slippage, such as commissions, one of the sides, and I'll show you an example here, one of the sides, either the buyer or the seller, has a positive expected return per trade. Now again, what this means is you have a strategy that is supposed to net zero at the end of the day. Buyers supposed to make zero, sellers supposed to make zero, right? Think about blackjack, right? Think about blackjack. Blackjack pays you as if you win half the time, but because you go first and because you can bust first, actually the house has a 0.43% mathematical edge. So again, blackjack is a great example. It's supposed to be you make nothing, the house makes nothing, but in fact, the house makes basically 43 basis points on every single hand that they deal, right? That is something with a statistical and real mathematical edge. And of course, yes, it's fun to play blackjack, and you have all those war stories about all the times you played blackjack, but over the long run, you will lose in blackjack. And if you haven't lost yet, you just haven't played enough hands of blackjack. That's really all it is. The same thing should be true for trading. You want to be the house in that equation. You want to be something where it's supposed to net out zero, but actually you have some sort of a 1, 3, 5, even 10% mathematical edge. If you have the edge in your favor, you can't lose over time. If you have the edge working against you, you will lose over time. It's inevitable. It's basically just math. And again, we have a bunch of examples of these types of mathematical edge strategies on this channel. And here's another example of what I'm going to talk about here today. It's the same trade done on market open, so that's 9:30 a.m. Eastern time, in the same stock every single day. Right? So again, think of the example of Jeff. Jeff was making $1,000 a week. It took him about 5 minutes. It happened roughly around 1 o'clock every single Friday. Now, the benefit of that is it's 5 minutes a week. But one of the downsides of something like that, because we have to find a downside in everything, is that it's only once a week, right? So if you do happen to lose every now and again, well, it's going to take you another week to recover from that. Something that is done every single day, and by the way, it's done in the first 5 minutes of every single day. So in total, it's 25 minutes a week to do this. But when you do it every single day, like I mentioned, the number of occurrences is increased. So when we think about, we have 5 days a week, and what I mentioned before was if we won, for example, 3 out of those 5 days, we'd win 3, we'd lose 2, but because we're doing those occurrences on a given day, we kind of net out to be profitable. And as I'm saying this out loud, I see that I've actually wrote that after this. So this is a trade done on market open 5 days a week in the exact same stock. All you need to know is it 9:30? And am I clicking the buttons correctly? And if you try it like 3 or 4 times, you'll be able to get it no problem. And what is really, really important is when you're going through this big data set like we do, we have these giant databases of market data going back 20 years or so. What's really, really, really important is you have to factor in the real world cost of doing business. So we factor in everything. We take all the profits, we subtract from the profits all the losses, then we factor in commissions, 65 cents per contract. We factor in slippage, 10 cents of slippage on the entry, 20 cents of slippage on the exit, and if a stop loss is used, we factor in 30 cents worth of slippage. Now, what I will tell you is this is much more extreme than the slippage you will get in the real world, but I like to really pad it very nicely so that I know these are the numbers, especially if you have a lot of occurrences. And I think in this example, there were 2,000 occurrences. So this is a lot. We want to be able to know, hey, realistically, like this is something we might be able to get close to into the future. We want to be able to net those in. So this trade wins about 65% of the time. So if you think about doing this once a week, on average, not every week, but on average, you should win about 3 times. You should lose about 2 times. Now, in this example, the wins are slightly smaller than the losses, but because we win much more frequently than we lose, we come out to be $120 per trade per contract. So this is really nice. On average, it's about $600 per week per contract. And this is the trade that maybe costs $1,000 to $2,000 to be able to do each day. So we're talking about really extremely high return on investment. Now, this is nice because, like I said, on average, this is once a day. So if we do it 5 days a week, 3 times we make about $540. Twice we lose $680, and that ends up netting up to be profitable on average. Again, some weeks you'll win every time. Some weeks you might lose 4 times, you might lose 3 times. It's pretty rare if you lose 5 times in a given week, but the net is on average, you kind of should make money every single week. Now, if you don't know what the numbers are for what you're trading, if you don't know that you have a mathematical edge working in your favor, right? Again, you are no different than a gambler at the casino. You may win a couple hands. You may win more than a couple of hands. You may win so much money you get a free buffet. But over time, you will lose. So again, if you don't know that the strategy you're about to employ, that the button you're about to click comes with a real mathematical built-in advantage, then I think you should seriously consider not even doing it. But once you get the edge in your favor, then it's really simple. You keep doing the strategy by following whatever the rules of that strategy are every single time you can do it. And you do not miss. Right? You do not miss. And what's really cool is your job is not to make money. Your job is to follow the rules of the system. And again, we have this big data set of all the market data from like all these different stocks every 10 minutes going back the last 20 years or so. We give that data set a set of rules, right? That data set gives us a result that looks like this: $120 per trade, per contract, per day. That's really, really good. So your job is not to go out there and make money. Your job is not to go out there and analyze the market. Your job is not to go out there and talk to people like you actually know what you're doing when it comes to the market. That's not your job. Your job is to go out there and follow the rules of the system. You need to follow the same exact rules that we inputted to get these numbers. That's your job. Now, on occasion, for whatever reason, you may not follow those rules. You need to aggressively figure out why you did not follow those rules, and then you need to put a lot of friction between you and fucking that up again, right? You basically have to be your own bumpers. And this is really, really next level stuff, but I think everyone watching this video can handle. If you lost the day before, maybe you get emotional. And because of that, you don't place the trade the next day and it would have been a winner. Put friction between you and doing that again, right? A lot of people talk about building habits on YouTube. Building habits is really, really easy. If there's something you don't want to do, put a lot of friction in between you and doing it. You won't do it. If there's something that you really want to do, remove all the friction so that it's really easy for you to do the thing that you want. It's super easy. So put a lot of friction between you doing that thing that you shouldn't have done. Like, for example, when it comes to the example of you got very emotional and you didn't place the trade, every single online broker has color schemes. Make the color schemes grayscale, so there's no red or green. When a lot of people see red, they associate that with losing money and they get freaked out and they get emotional. Instead, change the colors of the platform to grayscale so you don't see any red. You'll be way less emotional that way. Or go to the extreme. Take black medical tape and put it over the P&L kind of section of your platform. You'll be way less emotional that way. And again, let me make this a little bit longer so I could scroll. Perfect. It's the same trade in the same stock every single day. You just do that and nothing else. And you set a calendar reminder so nobody can book a meeting over you, and you make sure you're always available. That's it. That is literally it. And your 5-minute-a-day side hustle can bring you in money most weeks. It's not going to blow the doors off of it. This P&L curve is over a 3-year period. So this was about a 33% return each year. Again, that's really good for the world. We have stuff that is way better than that. But again, this is like the same time every single day. But what I think is really critical here is that the effort and time required for this type of a side hustle is unmatched, right? The effort required to spend 5 minutes a day to do this, that gets results that looks like this, is unmatched. Other side hustles, it takes you more than 5 minutes to put your clothes on and then get in the car to go wherever your side hustle is. This is something you can do from your phone. So one of the real big benefits is trading as a side hustle is the return on time investment is like out of control good. It's like crazy, crazy good. Now, again, there will be losses, but with the frequency of the wins, the ability to do this every single day, it helps to maintain your confidence. And as you can see here, there are losses. There are periods where the result is basically sideways. But over time, when you have something where the mathematical edge is working in your favor, again, you straight up will win. It's just because it just becomes a matter of time. So again, day trading, it's not a side hustle. It's a full-time job. Now, if you want to have trading as your side hustle, that's awesome. Right? There's better ways to do it than day trading, in my opinion. And like I said before, the people who I work with who are looking for 3, 4, or 5 figures a week, some of them take it to the extreme, like an hour a day. Others take it to the complete opposite extreme, which is like 5 minutes a week. Both have their trade-offs, both have their risks and rewards, but a version of that works really for everyone. And it's really simple. Get a strategy that has a built-in mathematical edge. If you don't know if what you're about to do has a built-in mathematical edge, maybe stop and go find one. Then, once you see something that has a built-in mathematical edge, like this does, to get this kind of result, you beat the shit out of it. You just keep doing it over and over again. You do it right. And when you do it wrong, you fix it. Right? I don't believe you will find something that will really be able to give you that side gig feel and that side gig income for the minimal time required, at least compared to other side gigs. And again, it all comes back to this: getting a strategy with a built-in mathematical edge. Now, below this video, there's a link. If you want to get access to all of my strategies that have built-in mathematical edges, just like the one that you're seeing right here, just like the one you're seeing right here, just like the one you saw from Jeff, go ahead and click the link below this video, and we'll go ahead and see if you're a good fit to be able to join my group, to be able to learn about all of my mathematical edges that put the odds in your favor so that your result becomes inevitable. If you want access to this document, I have linked that below this video as well. Also, if you found this video helpful, if you like what you're hearing, go ahead and give me a like, go ahead and share this video with your friends and family, and go ahead and give me a subscribe, and make sure to smash the bell so you are notified every single time I come out with a new video. But it's very simple. Day trading is not a side hustle. It is a full-time job. Day trading is not a side hustle. It is a full-time job. There are plenty of other ways to go about trading that are perfect for a side hustle. You heard from Jeff making $1,000 a week in 5 minutes a week. That's amazing. That's a great side hustle. It doesn't take him much time at all. This is an example of what is possible if you have 5 minutes a day on market hoping. This is the equity curve. I mean, there's really nothing that's going to get you a better and more reliable income source and ROI on your money for the minimal time spent. So again, if you want to learn more about those, go ahead and click on the link below this video, and I'll see you in the next one.